Welcome.
I'm Erica.
And this is Sherry.
And this is
Generation Conversation.
Whoop, whoop.
Whoop.
Today's episode is called A Moment in Mortgages. It's episode 24.
It's like I want to say that when you say a moment in mortgages.
Yeah. Because it's definitely a moment.
Yes, it is. Yes, it is.
And we have a special guest.
Whoop, whoop.
Who we got today, Sherry?
We have the infamous, my aunt and Erica's great aunt, Danglia Neal.
Well, thank you for the introduction. Thank you so much, ladies. I'm so happy to be here.
Well, very good. Now, the reason we brought Danglia, aka Dot, because I know I'm going to call her Dot or Auntie Dot at some point, just so you know, the reason we brought her here today is because she is very relevant to our topic. She has been a processor. She has been in closing at some point. But
funding, loan officer.
Yes, all aspects of the mortgage industry. And I'm going to let her introduce herself and what she does. But that is the reason why we brought her on.
Right. So I'm Danglia Neal, and I've been in the mortgage industry for so long.
Why not say how long?
I'm gonna say it, over well over 30 years. I've been in servicing, started out in servicing, and now I'm actually underwriting now. And it's very, very lucrative business, and also very, very it's never a dull moment. No day, I don't care what position you do in the mortgage industry, is never the same.
Right.
Okay, so we're just going to tap into the mortgage industry, how's it looking now, how it was back in the day. And this is very much an informational type of thing. And I'm going to just be here taking notes because I don't know nothing about it. So this will be a learning for me. And we're just going to discuss a lot of things, get to it.
Right. So one of the things is, and because Dot has been in the mortgage industry for so long, she's seen drastic changes in the mortgage business. Now, I want to explain real quick the differences. A lot of people get mixed up with the mortgages and the real estate aspect of it.
They do.
So the mortgage side is the financing.
The money.
You know what I mean? You have to qualify for the loan. You know, you have to get funding. You have to get a lender to provide the money for it and things like that. That's the loan. Then you have the real estate side. Those are the agents, and those are the people who find the house. So a lot of people, they say they're going to go to, get a mortgage. They thinking you're going to go help them find a house. Two totally different things. So I wanted to clarify that and let you know that she is more involved in the finance side.
And I want to also add that the real estate agent also is there to write your contract.
Right.
It's a lot of you may think, and a lot of times you can go and you find someone that's selling the house. Actually, my first house that I bought, we didn't have an agent at all, and by the grace of God, everything turned out right. But it's so many things that an agent does or supposed to do on your behalf to make sure your purchase is good and make sure there's nothing unforeseen or anything wrong with the property. They know all the right questions to ask, and they know how to draw up your contract.
Right. And you're right. They protect you and make sure on your behalf.
Exactly.
So that's good. And now, of course, if you guys have listened to one of our previous episodes, it's been mentioned that I had a mortgage company, Sheer Mortgage.
Sheer Mortgage, your home is where our heart is.
And when I had Sheer Mortgage, Danglia actually worked there as a processor.
Right.
So she helped to process the loan. So really quick, I want to run through the process of how a loan actually comes in. Okay, so you start off, normally this is the process. A person who's looking for a house, they get an agent and all that stuff, but then they get what's called a loan officer. Okay, so that's their first contact. The loan officer is the person that pretty much sells themselves to you. Say, I can get you a loan. I'll find somebody to get you a loan. So
if I can break in real quick. Now what's different, and I can just relate this back to back in the day, but now the real estate agents want you to come to them already pre-qualified. So more than likely the first person you'll get should be the loan officer or broker.
Right, because the agent doesn't even want to take you out to look at houses until they know you actually are qualified.
Oh, so that was different back in the day.
It was.
And that's back. And to me, I think really over the years, the real estate agents they've been more educated now because of they have to put more into purchasing a home. But before they used to call them glorified taxi drivers,
right?
You know, just to
Right.
take you out to a house,
Right.
Oh, okay.
Right.
Okay.
But yeah, they're very educated, and you know, and there was a lot that were educated then, but they're more educated now. And if you think about it, they were wasting a lot of time with people because they would take people out that couldn't even afford to get a house, you know, but the agent didn't know that.
Yeah.
So, you know, they got really smart with that. So that has changed. So, you know, you get your loan officer gives you to fill out the application. The application, I'm gonna get to a part you're gonna have to take over because it's been so long. So they fill out the application, then the loan officer turns it into his mortgage company, whatever mortgage company he works for, and then from there it goes to the processor, right?
Right. Yeah. Sometimes for the most part, it'll go through a person who kind of sets everything up for the process. But for the most part, I guess I'm trying to say the processor will get the file.
Right. And then the processor goes through and gets, you know, the initial documentation. Make sure they have pay stubs, bank statements, whatever, to get it prepped. As much stuff as possible before the underwriter looks at it, because in an ideal world, an ideal situation, you only want the underwriter to look at your loan one time, because you don't really want them to have to keep coming back asking for more things, because it makes the process really long. And plus, you know, you just don't want an underwriter to have to look at your file that many times, because as an underwriter, wouldn't you say, if you look at a loan so many times, you're going to start looking for stuff,
exactly,
right?
Exactly. And then I can tell you, from when you did it as a loan officer, that's changed, because now your loan officer is so many rules and regulations, so many disclosures that your loan officer has to do. So by the time that file comes to the processor, the loan is already qualified. So they're basically pulling credit, and they're basically calculating income. Now, of course, they don't know how to, you know, down to a T, but basically they're getting pay stubs, and they're making sure that they qualify. So by the time the processor gets it, basically it's a loan. Where back in the day,
we just threw it together. We just threw it against the wall.
How big was your pipeline for pre-approval?
Oh yeah.
You know what I mean?
Oh yeah. So that's true. So now their pipelines are not that big.
Exactly. I mean, they're not pre-approvals.
Right.
Their pipelines are big now because they're getting them in the door.
Wow.
And, you know, they're doing stuff.
No, so when we did it, we would just be like, you got a job? Give us some pay stubs. We wouldn't look and see exactly how much we made. You know, we just thought that the loan processor and underwriter, they would handle that. We just got the information, the documentation that they need.
Right.
And when we say pipeline, for those that don't know, pipeline means just like your list of how many loans you have. You know, we call it a pipeline.
How many borrowers that you have.
Because a loan goes through a pipeline. You know what I mean?
So this is actually good, because it looks like old school, new school is with y'all, essentially.
Right, that's true.
I mean, you know the old school and the new school, but Mom, you were kind of considered just old school, and you don't really know the new school ways.
Exactly.
So do you think, just quick question to add in, these loopholes back in the day and how they've kind of tightened things, the loopholes back in the day, do you think that was a cause of the market crashing?
Oh, absolutely. Absolutely.
That's why all these regulations and everything and disclosures come about, because you have loan officers. I mean, I don't want to dwell too much on fraud, but just for the fact of saying, okay, you know, you want a mortgage. Now, me and you close, and I may ask Sherry, let me just give me Erica's social security number. Let me pull up her credit. You can't do that now,
right?
You know, you have to, you know, if you pull somebody's credit, they have to sign documents X amount of time from the time that loan officer pulls your credit, and if once all the documents come in, they have a department that looks at all these dates, and if your date don't comply, you're out of compliance, you got to start the process over again.
It's crazy. It's crazy. And it was never like even close to that. And like she said, the documentation, I mean, the disclosures that you have to sign, just a disclosure is just something that tells you, you know, okay, I promised to do this, blah, 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 whatever. And you sign it. We didn't even have that many disclosures. And then there's what we call the good faith estimate. That's totally changed now, too.
It's totally changed.
And it tells you, like, just basically the cost of your mortgage, like how much, what your rate is, how much you're financing, how much your closing costs are, all that stuff. Right. That's even different.
And now it's a settlement statement. And your settlement, you have a pre-settlement statement that needs to be signed X amount of time from the time you apply, and then it needs to be more towards closing, you have to sign it X amount of time before you actually close.
Right.
Whereas before, they were just shuffling papers together and I'm closing tomorrow. Okay. You get there, and in the beginning, not harping on fraudulent loan offers, but in the beginning, they may have told you, okay, Erica, you only have to come to the table with $3,500. And by the time they rush everything and put it there, you come to the table, what? $7,500? That wasn't, rather, and then a lot of times, Erica, people were so happy that they would get ready to go to closing. They're looking at this house. Oh, that's my house. I'm going to do it. So at the table, it could have been fees that was added on, but you can't do that anymore.
Right.
Your rate could be higher, but you can't do that anymore. Yeah. But see, a lot of times these loan officers, you go to the table and you've been riding by this house all the time. You finally got the appraisal done. You go in there, you did your last walkthrough. You get ready to move in next week. You got U-Haul all lined up. You get to the table, so you kind of force.
Right.
That's kind of
because you're not going to walk away from that.
Exactly.
Quick,
I don't know, man. If they come and charge me all this extra money, and
you got people that's just your way of thinking it. But you got people
like
all
it's your
walks
dream
of
house,
life.
and you.
Or the fact is they don't have nowhere else to live.
Yeah.
You know what I mean?
Like
They just got
they
just sold their house, or they just got out their apartment, their leases up. You know what I mean? Things like that.
Yeah.
But we did have people that used to, because closing didn't always happen on time, which is very rare. But it seems like closings happen a little bit more on time now.
They have to.
Oh, because of everything.
Yeah, they have to.
Okay.
So it's no like, I'm going to close next week, and they keep telling you, and I had, who was it? Oh, a friend of mine who was purchasing an investment property in a different state. Mm-hmm. They kept telling him, well, you closing next week? And I kept telling him, listen, that's not the way they do things now.
Right.
I said, something is going on. You need to talk to your line. I told him different words to ask, because at this point, if he's telling you that it's closing, that means that it's already came out of underwriting and it's in the closing department.
Right.
And then they come back next week and say, well, I just need this latest bank statement. Well, it's not clear to close.
It wasn't clear.
Right.
Mm-hmm.
Okay.
Yeah.
So go ahead with sorry I interrupted.
Yep. So then the process goes after that. The processor gets it all together and gets it ready. At least enough information to get an approval out. But before that, you get your pre-approval. The loan officer, who gives you pre-approval now?
The loan officer. That's when the loan officer actually pulls the credit, and gets your pay stubs and looks over and basically asks you basic information, and then he or she is able to spit out a pre-approval. But the pre-approval is going to say based on all documents like your full income documents and things of that sort.
So then that's the pre-approval that you could give a real estate agent, so you can start kind of looking
Okay.
So then then the loan goes from the processor to the underwriter, and the underwriter is the one pretty much who determines whether you're going to get this loan or not. You know what I mean? They're the ones with the real say. So they're the ones that look at everything. They look at when you send, I used to tell my borrowers, I used to say, we need to package this loan up like a book, like a little story, so that the underwriter knows that you qualify for this loan. Mm-hmm. So they need to look at your little book, and they need to see that your name is this, you lived here this many years, you worked here this many years, you pay your bills on time. All that needs to be documented well in the in the loan, so that they can look at it and they can get an idea of who you are and if you qualify for this loan. And most of the time it'll come out with what's called conditions, stipulations, and it'll say, this loan is approved with the following conditions. Now, back in the day, because we used to just get loans in there, our conditions would be like pages and pages. It'd be like, you sent me one pay stub, send me another. You sent me, one bank statement, page 3 is missing. Now, let me tell you how it is. It used to be, and it probably still is now. You know how you probably don't. See, that's the thing. Y'all don't even get physical bank statements anymore. Everything's on the bank, right? So we used to get physical bank statements in the mail, and they would be, say, 3 pages, and you have all your transactions on the first page, and your second page is a continuation of transaction, and then on the third page is blank.
They would need that?
They would need that because it said 1 of 3 on the front.
Dang.
Yep.
And I can tell you too, Sherry, just from what you said thus far, as far as getting it in and the process it gets, and then as far as making it a good story, they have so many different avenues, so many different things that go into your LOS, your loan processing system or underwriting system, that A lot. It's easy for
It's
the underwriter.
automated.
It's automated.
It's automated.
It scans it in. It knows if you didn't check this, like it'll scan it in. Like even DU in automated underwriting.
Right. Desktop underwriting.
Yeah, that's what you plug all your information in and you send it through the automated underwriting and it spits it out and it'll tell you, okay, well, the co-borrower checked that they were a co-signer on a loan.
Right.
So you got to get that information. Where before the underwriter really, and it took longer for underwriters. So I can say it's easier.
That's what I was going to ask you.
At the same time, you get through more loans. Like before, maybe the underwriter maybe 3 loans a day.
Right. Now, how many?
My goal where I work at is at least 3 new files a day, and then you got like maybe 7 conditions. Okay. 7 other loans that's coming in and was already approved.
Right.
And
yeah, that's a good point. So a lot of it is automated. Now we used to use DU automated system, but these were for people who had great credit, straight up scenarios, nothing, wavering pretty much. We used it for them, but now you use it for everybody.
Yeah, 99.999 times out of 10 is going to be. Now you're going to come across some different programs, where it's going to be, that it's going to be an underwrite from an actual underwriter where they go through, but it's different programs like maybe your down payment assistance, some of those programs. Your USDA loans, like loans that's properties that's kind of far out and stuff like that. And I guess
that makes sense that a lot of it's DU now because they don't have this subprime market anymore.
Exactly.
And subprime market is the market of people who don't really necessarily qualify, or they have high debt to income ratios, or their credit is a little sketchy, but they still were able to get loans back then. So that's kind of different now.
Right.
Okay. So then after underwriting, and after they go back and forth, clearing conditions, and finally everything is in, and the underwriter says, okay, good, this is a good loan, appraisal's done, inspection, all that stuff is done. We're going to clear to close. Then it goes from the underwriter to the closing department.
Right, the closing department. The closing department has their own list of things that they need to go through and make sure before they actually close the loan. They could have, missed something. Everything, the way it's broken down, every department, I mean, it's good. Like your chance of error for that loan closing and something was missed to come back is very low now because you have different departments and they have different things that they look for on a loan that the underwriter may not look for. Of course, the loan officer don't look for. So, because a lot of times if a loan closes and if it goes into like first payment default, meaning that if you close on your loan and then for whatever reason you didn't make that first payment, then whoever closed that loan for you, that broker, because the broker is not really the person who's giving up that money, that lender, whoever he closed that loan through, that bank, they have to buy back that loan. And see, a lot of the banks, they're not in it to service the loan, meaning that they don't want to be the person that you make the payment every month. They buy it. I mean, they close it and they sell it on the market.
Okay.
Yeah.
So who would they sell it to, or like what type of
servicers?
Yes, different servicers. There's a lot of different people. Like you got Fannie Mae or Freddie Mac and FHA. You got all these people that kind of look at the loan and kind of put it on their books and different companies.
Right. So they got different companies that's all they do is service loans.
Okay.
Yeah.
So like SPS is one of them, I know, and that's all they do is service loans.
Yeah.
So you make your, you could have closed with Wells Fargo, but you make your mortgage payment to by the time by the time you start making mortgage payment, your loan is probably already sold.
Right.
And then by the time you make that second payment, it's probably sold again.
Right. Yeah.
You get a new letter in the mail saying, "Hey, your loan has been sold to such and such."
So you gotta make your payment to them now, whatever. So then you go after closing. It goes to the real estate agent after it goes to the closing department at that finance company. Then it goes to the not real estate agent. It goes to the attorney, right? Which is a third party. They're not usually part of the finance company. I don't think legally they can be. I think that's a conflict of interest. Like I don't think a lender can have an attorney to use for closing.
Well, the thing is, I'm not going to speak too much on that because I don't know. Actually, it's up to the borrower. The borrower chooses who they want to close with.
Oh, that's different.
Yeah. And they can check and say it doesn't matter, but that's one of the disclosures that goes out. Yeah. Because you're paying, the borrower is paying money to these closing agents. So you got a closing agent that may charge $800 for a title search when you know this person over here that's a title company too that only charges maybe $500.
See, so the borrower now has to be a little bit more well versed, right, than when I did it. Because when I did it, a lot of times if they came to us for a loan, we would give them the real estate agent to use. We would give them the attorney, because we established relationships with the real estate agent. We established relationships with the attorneys, and we were a little group, so we would use the same attorney, or we would use the same real estate agent, and and then when they got people, they would send them to us. So we kind of work together. So that's not necessarily how it has to be now, because if the borrower says, I want to use Sam McGuire. Remember Sam McGuire? I want to use Sam McGuire. They can. Mookie used to work for Sam McGuire, Erica.
Oh, yeah?
Yeah.
Okay. So that was good. A good breakdown of the process. That's a lot. It seems like there's a lot of hands in the pot.
Yeah.
And just like you said, like a pipeline.
It is.
And at any point, something can just
most time it does.
Set something off and be like, oh, no, hold up.
But you get with a good company, a good lender, and I always call it, it's like if everybody do their job, it's like a well-oiled machine.
Okay.
Right.
It'll come through and it'll keep flowing, it'll keep flowing, it'll keep flowing. Those are the best kinds of loans. Of course, everything's not going to go that way.
Right.
But for the most part, and sorry, y'all probably edit this out, but 9 times out of 10, it's the loan officer's fault why something down the line didn't flow right.
We see where you...
No offense, loan officers.
They know. I used to be a loan officer. I was a loan officer, so she's right. You know what I mean? She's right.
Okay. So say if you were to look at like my file, like if I'm considering buying a house, and I have this income, but I spend a lot of money. As an underwriter, like how do you kind of gauge that? Like,
well, you can spend a lot of money, but as long as that money is not in credit cards or anything like that. Okay, so you can spend your cash. You can spend this and buy that. I mean, number one thing, you're going to have money to come to the table with. So
So say I have a friend who spends a lot of money in credit cards.
Okay.
Asking for a friend.
Asking for a friend, they need to get their debt down.
Okay.
They need to get their, because what you want to do is make sure that you qualify. What they do is it's called debt to income ratio. So if you have more debt than you had monthly debt, then you have monthly income, that's not going to work. Right.
So what would you like? What would be some suggestions? Like get your debt down, and I've heard like little things. I'm trying to think of some stuff.
Well, it all depends on your
loans and just like.
Well, you could. I mean, if you're at a point where you can't get this debt down, so there may be some avenues where you can go and get a consolidation loan. And I only say I don't speak a lot on that only because back in the day when they had those, it was always people everybody's trying to do something to make money, but they were ripping a lot of people off. Them consolidation loans wasn't worth it.
Right.
Do they have some out there now? I haven't heard of any. A lot of the files I look at, the loans I look at, they don't do that. They basically either pay their debts down or off. And a lot of times, if you're looking at trying to build your credit score, you don't pay them all the way off. You just pay them down and don't close them. Even if you're not using them, don't close them. So that's the way you just control your spending. Tell your friend, and then I mean, and I just want to say this real quick. A lot of people, like, say if your friend is renting, if your friend is in an apartment paying $1,200 for an apartment, a lot of times, I mean, unless you're trying to get a big house, but if you got a person that's their first time home buyer, or maybe a couple that's just maybe them two and a kid, or 2 kids or whatever, and they're in this high price apartment, a lot of times they get into a house and their rent payment is so much more than their mortgage payment. And then I hear a lot of people say, well, I'd rather rent because if anything goes wrong, I can just call apartments. They have things that they call, you get your warranty, your home warranty. You pay $800 a year, and you can break it down monthly for a home warranty. And anything goes wrong in your house, there's a plumbing issue. Of course, you're going to have a copay, when you pay, but it's so much better, and it's your own home. While you're paying on it, that's money in your pocket because you're building equity. Exactly.
So that's a good point, because I was just having a conversation with someone about them just going and renting an apartment, renting a home just to get out of the house. Granted, everyone's situation is different.
But
just in that situation, your money's not going to anything. I'm just saying in regards to like the benefits of actually buying,
Right.
as opposed to renting.
Yeah.
You know, you're buying, you're paying monthly to get your mortgage payments, like, or pay your mortgage off.
Right.
Essentially, but in the
Right.
apartment,
It's going
it's no,
towards
yeah,
something.
it's not going to anything.
Right.
And I feel like that's a lot of. I mean, I feel like my generation is becoming more versed in mortgages for sure.
Yeah.
But a lot of people don't see the benefits of actually owning and buying.
Right. And see, a lot of same things too, you got to put this black and white. Wherever you live at, you're going to have to pay.
Yeah.
You know what I
Exactly.
mean? Unless you come across something. If you're living with your parents and they don't pay, but then what kind of privacy do you have?
Right.
You know, and then it's not your home.
Right.
You know, but a lot of people, not a lot, but some people feel, oh, I'm not going to pay. Why pay that much money every month? You know, it's a 30-year mortgage or a 25-year mortgage. But wherever you live at, you're going to have to pay.
Anyway.
Yeah.
Exactly.
So
Well, you
why
should
pay?
anyway.
Right. Why pay on this apartment when it's never going to be yours?
Right.
You know, there's so many
Space.
stipulations that you have for that.
Right.
The space,
Right.
you know,
Right.
and you got to consider your neighbors, and then you know you got to consider maybe if you're playing your music too loud, or if you're living across from someone or next to someone that's
Right.
you know
Right.
shady
Exactly.
or anything
You
like
can't
that.
paint. You can't.
Yeah,
You know.
so much. Yeah, you can't.
So much.
But like
stuff.
for some people, it's good temporary situations. They don't
Temporary
have
situation, yes.
any other option. But
Right.
Right.
Or some people too. I think it's good too for some people just to, because sometimes they need that to learn how to manage money
right,
Exactly.
that's true.
without
That's
actually
true.
going into a house,
Yeah.
having to get used to knowing how
Right.
to
Right.
live on their own and stuff like
Right.
that. So that
Right.
makes me think of a question that I have for you, Auntie Dot. So the whole issue is, say if you have somebody that doesn't pay any rent, like they live with their parents or they don't pay a lot of rent. So I had someone like that don't pay a lot of rent. I know somebody like that don't pay a
And
lot
Great
of rent.
Buy, doesn't
Yeah.
matter. What you talking about that? What was they used to call it back in the day?
Yeah, the shock, payment
Yeah.
shock.
No payment.
Oh, okay.
Wait,
You can,
Okay.
yeah. You
I've
don't
heard
have to-
about a payment
Right.
shock.
Right.
I've heard
Right.
that exists.
Exactly.
So, I mean, well, it probably does. It still exists.
No, not in. I'm not going to say non-subprime because is it either even subprime out there? I don't think it is.
I don't know.
But no.
Yeah,
I mean,
it used to
because
be
it's
a
all
thing.
based on your credit score.
So it used to
Okay.
go like this, Erica. This is what payment shock used to be, what it was. So, say for instance, you wasn't paying anything. If you lived at home and you wasn't paying us anything, then you went to get this mortgage, and your mortgage for this house that you qualified for was $1,200 a month. Your payment shock is the difference between what you're used to paying and what you're going to pay. It'll be $1,200.
Yeah.
So
So they would have a percentage.
they would have a percentage.
But see, a lot of times it was these lenders, what they call overlays.
Right.
Because if you have automatic underwriting, it's not going to tell you that. But you
Right.
have different banks that say, well,
In addition to-
yeah, so I don't want them to have this much payment. So I got to be
Right.
that. But now companies are underwriting their
Just
loans
off the
straight
DU.
off of that automated
That's very
underwriting.
interesting.
Mm-hmm.
Yep, that's very interesting. Yeah, I always thought about that payment shock.
Mm-hmm.
It's probably a lot of.
It is a lot
I'm
of
telling you,
things.
back in the day, your debt to income ratio could go up to 55%. We used to. That's a lot, Erica. That's over half of your. That's saying that your bills are more monthly, what you pay monthly on your bills, and this is not including stuff like electric and utilities. This is only
Car
stuff that show on
insurance,
right,
food.
not including any of that.
Right.
Only what shows up on your credit report. So we only talking your mortgage and your car note, your credit card, student loans. That could be over half of what your monthly income is,
And you still get approved.
and you could still get approved.
Knowing that when you get paid, you're not going to even have money
Exactly.
to eat. But hey,
Exactly.
you got a loan.
Exactly.
So
You
how
got
long
a
have you
mortgage.
been out of the mortgage industry?
Oh my
Ma?
goodness. Well, 10
10
years.
Okay, 10 years.
Mhm.
Okay, so this is a 10-year, and it's forever evolving and changing.
Yes.
Oh, forever. Because
Yeah.
when I first got into it, this was back in the late 80s.
Right.
Shoot. I was in servicing then, meaning I worked for a company that serviced the loans.
Right.
That we would make sure that their insurance was being paid, their taxes were being paid, and things of that sort. But I worked for this company, and you know what rates were then?
What?
Did the loan?
Mm.
13.
And that was a good.
15%.
That was a good rate.
That's a good rate compared to now
I
where it's
would
in the
say.
2s and 3s.
Yeah, that's
Yes.
crazy.
Isn't
Yeah.
that crazy?
And then when I was doing loans,
Dang.
7% was a good
Yeah.
rate. That was
But
a
I
good
mean,
rate.
I think this is the market right now. I think when it changes, because it's a seller's market, what they
Right.
call it right now,
Right.
and then when I guess it goes to what, a buyer's market,
We hope.
the rates will be higher though, right?
Probably.
I don't think they would
They don't think they will
ever.
shoot up.
Not like that,
Okay.
though.
Well, not
I-
to that,
and
but
then-
maybe
right.
the 7.
I don't think it's gonna go that high.
Yeah.
No. Okay.
Nope, I don't think so. Unless something happens,
Yeah,
something in
something
the economy
major.
has to happen.
Mhm.
Okay.
Yeah, but
Okay.
yeah, that's crazy.
So, with it being a seller's market, do you ladies think it's a good time for a new home buyer to buy or to even consider?
Let me just tell you this, okay? And because they're throwing up houses all over. I mean, and it's all depends. In my opinion, this is only my personal humble opinion, is how bad you want it. I can tell you that I've been back to work from being hurt I did 4 weeks. I've only seen one contract that came across where the seller was given money towards the closing costs. Normally, what is it, 3%? They give you 3%. You don't have, but normally,
Yeah.
at a buyer's market, you know, I want my 3. Okay, let me just give them the 3%. Meaning
Right.
they're giving you money towards
Your
the purchase.
closing
Yeah,
costs.
your closing costs.
That's an
I have seen one loan that had, you know, everything else is zero. Not only that, you gonna think I'm lying? Okay, so probably 70% of the purchase loans that I've underwritten since I've been back, and this has been going on before then, but it's like so crazy now, is now people are buying homes that are appraising less than what they're purchasing it for.
Which is ridiculous. That's like
That's what I've heard.
that's like buying a car that costs. Say you bought a car, it's $20,000. Okay, the car is only worth $25,000, and you go pay $30,000 for it.
Yeah.
Why?
People are desperate, and people.
Well,
are
and it's a lot of, you're absolutely correct with saying that, because there's a lot of reasons. Because number one, their rent is going up to too crazy.
Yeah.
Yeah.
Maybe they, you know, whoever they're renting from don't want to redo their lease.
Mm-hmm.
So they're kind of, just like you said, they're desperate. And it's in their contract. I read a contract and I'm like, is this serious? I read a contract that actually stated, okay, I'm selling you, I'm just going to use figures. I'm selling you this house for $350,000, right? Okay, so even if it don't appraise for $350,000, you want to pay me at least $25,000 more than it would have appraised if it don't come in. Not only that, if I get an offer from somebody else that's going to pay $100,000 more, then you're going to meet that $100,000. And this was a house for like 5 something, but
that's ridiculous.
and they actually signed it, and it's like, what, you know?
Yeah, it's really like, why? I mean, like,
But, and you know what too? And this is making homes go up. You know, they're making the values go up. But I bet you, like the realtors, I feel bad for them, because now imagine if you had a realtor like that, and they're trying to make money. You know, they don't care really whether you know, whatever. They want to make you. They want your house to close. So they probably coming in. I can only imagine they're coming in using the fact that, oh, I mean, yeah, you should buy it because, you know, the market, the house is going to be worth that another year. You know, you pay that for, you know, the selling tip they're going to have to use.
Right.
So check this out. CNN has an article, and they're talking about the housing market is so hot, buyers are paying $1 million over the asking price. That happened. That's a real scenario.
I'm telling you.
They said that happened, and then somebody gave some kind of bitcoins on top, some crypto coins on top of it to the buyer. Then in this case right here, so it says competing against 50 other offers on the home. The buyer offered more than $100,000 above the asking price, all cash. But the other buyers did the same thing. So to seal the deal, the person's name is Browns. The Browns buyer offered something extra to buy the seller's next house.
Are you for real? Oh my God.
Listen, and you got to look at it this way too. You got to look at it this way too. People don't feel like, you know, I don't want to look at a house. I'm tired. I don't want to keep going to the process. Exactly.
Let me just throw some money at it.
Right. I'm going to go to this house. Oh, I really like this house. And it's a bidding war. You know, it's a bidding war.
And it's exhausting.
Yeah,
and you really like a house. And you really
And it's exhausting for the seller too. The seller like, listen, and they probably overwhelmed like, okay, seriously, can we ask that much money? Okay, yeah, let's say $100,000 more. afford.
Yeah.
You know,
Isn't that crazy?
I think COVID had a lot to do with this too, though. Like, because there wasn't there.
Well, COVID has something to do with the rates and all,
Right.
like the whole industry as far as the economy.
Yeah, and then wasn't there like a policy or something instilled where they do foreclosures?
Right, people couldn't get kicked out of their houses. Right.
So, and then too, like a lot of different money.
Well, see, these houses that we're talking about, when these people come in and offer, like the foreclosures, they're bank owned. So it's not like the realtors.
But investors are buying them.
Yeah.
The investors are buying those bank owners and then turning around and selling them.
Right, but they're not selling them as quickly as they can for whatever reason. It takes so much longer. Even if you come in and say, okay, this house banker, you sent your people out and looked at this house, we'll offer you that much more. It's so much red tape and stuff that they're overwhelmed too. And you would think they would try to get it off their books, but they don't. It takes so much longer for you to buy what they call real estate owned REO property.
Right. It's crazy.
It's crazy. I was gonna say, but COVID too, a lot of opportunities or just unemployment, PPP loans, allow people to get a lot of cash from the table, so they're just throwing it.
Right.
And not necessarily. I wouldn't say deserving of the house or like.
Right.
It's a little back route to it, how it was kind of back in the day, like that money income coming from.
And see, that income, I guess, is income that you could take. So to verifiable income, that was always an issue. I actually had a borrower that told me they didn't put their money in the bank because we wanted bank statements. He said he had $50,000 saved up. I'm like, great, you know what I mean? Show me the bank statement. Oh, I'll put my money in the bank. Okay, where do you put your money? In my
mattress.
Yes. Okay, dude, we can't document mattress money. You know what I mean? When we supposed to take a picture of it, like, okay, go take a picture of this money and we can say, and a lot of people don't understand that, you can't.
So that's a good point to it. So what is the law or the regulation about income? Like the amount of time you're supposed to have a specific income in one job, or even an example as travel nurses. Travel nurses made a lot of money this year, but for some nurses it was their first time being travel nurses, and that income it looks a little crazy.
Right.
So like,
it's what they call variable income, and it just depends on your scores and the position, the type of job it is. So a lot of times, if it's not declining, meaning that in 2020, when did the code come out? 2019. 2019, you was a travel nurse and you made $100,000. 2020, you was a travel nurse, but you only made $75,000. You know what I mean? That means your income declined. Anytime there's decline in income, 9 times out of 10 is not going to work, and they're definitely not going to average it. See, a lot of times with the variable income, when you got it fluctuating, they can average it. Like take your income, what you made in 2019 and then in 2020, and it's 12 months in each year, and divide both of those incomes by 24 months. And they can use that. But for the most part, like if you have a profession like yourself, like even coming out of college, how do you say, you have to have 2 years work experience? No, you give them your degree and show that you and then if you got a job that's stable income, you know what I mean, you started, you have to have started and received the pay stub, then they can use that income.
So they basically will look at it and say, you being in school is part of your line of work, because you were doing something. You weren't getting paid, but you were doing something toward that same line of work.
Okay. So how would y'all describe y'all home owner buying process?
Well, I mean, I think because we both was in it.
It made it a lot.
It made it a lot easier because you knew what to ask for.
Yeah. A lot of people don't.
Right. And but a lot of people, which I hate, and which we gotta, us, especially as Black people, we have to get it across that is not as difficult as it seems. Don't get me wrong. There's still a lot of, and that's a whole different thing. Redlining. It's a whole lot of a whole lot of redlining. Where they make it hard for our people or for minorities to purchase. I mean, they got so many different programs, but then they tend to not let these different programs into different areas because these different areas are minorities. But for the most part, it's not as difficult as you see, especially because you got people, like a lot of our people, they work even at factories or whatever, they're on a job for 20, 30 years, you know what I mean? And they rent. Wow.
They got steady income.
and they don't know.
Yeah,
you know
I
what
think
I
that's
mean?
a lot of it. What it is, or people may be scared. They don't know, so they're scared of being screwed over.
Right.
Right.
That's
People gonna take
exactly.
advantage of
Yeah,
them, which I get because
And they don't know where to start.
thank
Right.
God I have y'all, because I would be like, I ain't gonna do it, or I'm gonna
Uh-huh.
be putting it off because I don't know, and
Right.
somebody gonna get me out of more money than I even had
Right.
in the first
And
place.
that is why I loved having Sheer Mortgage, because of all the people that I was able to help. You know what I mean? And a lot of times I got a lot of the garbage loans. I did get a lot of garbage loans. And I say garbage loans because they weren't the pretty loans with the bow tie on or whatever, but they were loans that came where the borrower came to us in a desperate situation because somebody else couldn't do their loan. And we had to be creative a lot of times.
Yeah.
We had to be creative. We had to sit them down and be like, all right, so look, tell me how you make your money. You know what I mean? How do you do this? And then we had access to so many programs because we worked at so many different companies. So we knew a lot of people. So we knew a lot of programs. We knew the industry. So we would know, okay, we're going to send your loan over here because you can't verify all your income or whatever the case is. And it would make them so happy to get a loan when they thought they didn't have a chance.
Yeah.
You know what I mean?
Impossible. See, that's why I say a lot of times when you take all of that up and you see this house and all this time, oh, this is going to be my house, this is going to be my house. Then you get to the table,
Right.
and you looking like, huh?
Yeah.
You know, but I'm I got that money, but
I
what
wasn't
I
spending
need,
it
I
on
got some
that.
money, I need to do this and that. Well, you're going to have to come to the table. What's up?
Yeah. And we used to give prep talks. I used to be like, look, I'll do your loan, but you're going to have to trust me because it does require trust.
Yeah.
You're going to have to trust me. When I say I need something, I need it. Don't try to talk me out of it. Don't try to talk around it. Or if you don't have it, tell me. You know what I mean? So, but I used to really, really enjoy it. My best customers were the ones that came from California too.
Oh yeah.
Because
they was ready to put down some money.
But they would be so happy with their house and their little mortgage because they were like, "Oh my God, I got a mansion and I'm only paying $2,000." You know what I mean?
Yeah.
So.
Yeah, but it's definitely changed, and we call it riding a roller coaster because it's changed so much, but it's going to still change.
Continue to change.
Yeah.
So do y'all have like a time frame where you think it's gonna kind of calm down a little bit?
I have no idea.
This right here, I don't know. I don't know what's happening right now.
Yeah.
This isn't like nothing we experienced. Now, back in 2009, 2008, when everything blew up, we knew that was coming.
We knew it was coming.
We
That's
knew
why,
it was coming.
and they was closing us.
Yes.
It was a
We
bubble.
knew it was coming.
Yeah.
Because we knew, because it was people that were getting loans that did not really qualify.
And they wasn't going to be paying their mortgage. They paid maybe the first couple of months.
Yep.
Even a year.
Yep.
And they was foreclosing.
So we knew that was going to
so
blow
y'all would
up.
just wait.
And let me just add
could.
this. Exactly. Now, what she was talking about as far as this subprime, where they have loans where they called stated, meaning that you didn't have to prove your income, you just stated your income. The whole reason behind that initially was for people that was coming out of school.
Right.
You got doctors that's coming out but don't have, can't show that they're making that money. But now they're going to be working for Johns Hopkins, and they give them a high interest. They would put them on an adjustable rate, okay, or an interest only. Okay, for the first couple of years, you just pay this high thing. But then, then you go and you refinance.
Right.
But they wasn't doing that.
They was just staying with that thing, and then
that mortgage
balloons
going up. Yeah.
It's so much to it.
And then they would walk away. They would walk away
from the house.
Yeah.
That jacked it up.
Yeah.
Yeah.
It was so many different things. It was just so many different things. If you had a good credit score, you could get a loan without verifying your income or your assets. You just put your name down on the application.
You that now.
No, you don't, because the rates were high.
Yeah. Okay.
Yeah.
So similar to like Fun with Dick and Jane.
Yes.
Oh my God, that movie.
Were y'all surprised when it came out?
I loved it. I watched it over and because it was definitely
exactly like
wasn't no jobs out there, and that one job you would find out, you would go and it'd be 1,000 people interviewing. How in the world I'm gonna get this job?
Yeah.
You know what I mean?
Yeah.
It was crazy.
Yeah. But Fun and Dick and Jane, it was exactly that.
Yeah.
I'm telling you, when the mortgage industry, I remember it just like yesterday. When the mortgage industry blew, I had a loan with option one. I had a loan at the closing table, waiting for the money, and they didn't have the money. And I called the lender. I'm like, the funds haven't been wired yet. What's up?
I remember when it started. When it started, it was like a domino effect. And I was working for Morecap. Morecap was one of the best companies.
I used to work for Morecap. Crystal used to work for Morecap.
Was the best
company.
So you know, and they were just about to go public, you know, on the market where they would and they call them hedge hunters, where the people that was buying up these loans and stuff. But then, like I said, it was blowing up. So then they stopped. Then they couldn't become, and they were running out of money.
Right.
That's why they were trying to become public, and it fell through. And Danglia Neal, hey Diane, if you're listening, maybe I shouldn't have said that. Y'all probably can edit that out. But my manager at the time would sneak us our paycheck early, and be
just
like,
in case.
because the money wasn't there. It wasn't just in case. The money wasn't there. Like everybody wouldn't get paid. Like you get your paycheck, but she would be like, listen, lunchtime, take early lunch and go to the bank. Don't deposit it. Go cash the check wherever the bank was written on. The check was written on. Don't deposit in the account. Go there and cash it. We would go. Then by the time people get their check, they would be like, no money is in there. They're saying come back. And some people had to wait a couple days, a couple weeks to get paid. But that company, that guy cried. He hated doing his people like that.
Yeah.
I mean, the owner of that company, I mean, that was the best company.
heard that one week, he paid everybody out of his own money.
Yep, he did.
Dang.
I mean, granted, he felt bad, but he was making money. Them loans, he was rich.
Yes.
But at the same time, that's why he was trying to go public. You know what I mean?
Right.
But
Where is this man at now?
I know.
He passed away. Yeah, he did.
Wow.
Yeah, he did.
Wow. That is crazy. Now it seems like it's just vicious in the market. It's just, I mean, it probably was back then too, but it's just like.
I mean, I think for the most part, without this craziness with the, sellers market, I think it's pretty good. Because before you had people coming down that was barbers that's getting their mortgage license, don't know nothing about a mortgage. They just go down there and get their license, and they can tell you anything. Okay, I can get you that, and just and sell you at a rate because you're ignorant, you don't know, and you paying 10%, and they get made all this money on that 10% when the rate should have been 7. You know what I mean?
Mm-hmm. So they pack their fees on your interest rate. So if the bank is giving them 7, they pack 3% more on there. That's a lot of money.
Paid. And see, they were getting paid up front. Whereas when you close the loan with that lender and they sell it, that lender would make money over time because they were servicing it, so they were getting money. But see, what happened was the brokers, the loan officers, the brokers was getting their money up front.
Right.
So they were getting it and leaving. Right. They didn't have anything that they call skin in the game. They didn't have any skin in the game.
Right.
You know.
So so that killed the whole mortgage broker thing. So that's why I had to close your mortgage because. Unless I was a lender, it wasn't really anything I could do.
Right.
And then they finally started coming back around, and even like now, when they first started coming back, processors had to get their broker license.
I saw that. They don't have to anymore? Mm-mm. Oh, okay.
No, it helps now, like with different companies, because then you can review the closing disclosure with the borrower.
Right.
But like now, like you can't discuss fees unless I have a broker license. I can't, should be true because I can't discuss your fees, why your rate is this, what you come,
Right.
Right. Yep. So.
Yeah, but I think it's better just being in the way it is now.
Right. Yep. Any other
advice that y'all want to give anybody looking to buy or anybody looking to even work in the mortgage industry? Just advice to anyone.
As far as working in the mortgage industry, it's very lucrative. It's the one position that you do not have a college degree. I do not have a college degree, and you can make money. The only thing is, you have to be very detailed.
Yeah.
You can't just go in and just, I call them paper pushers.
Right.
You're not going to excel that way. If you're a type of person that you have to like to read. You need to read. And
like you said, pay attention to details.
Yeah, if you get with a good company that can train you, you can excel in it. You can, you can really work well.
It's a good hustling job.
It is.
Like, because, they a lot of times they'll pay you, especially as a processor, they pay you a certain amount of money per loan. So, you get your salary and then you get, money based on how many loans you do. So if you go in there and you really, you want to go on vacation or whatever, this week this month I got to push it because you know what I mean? And then you do that. So it's a type of job that you could go in and, of course, when we were younger, it was, we liked it. We liked that, we had the energy for it and the hustle for it. And it was a legal hustle. That's what I always said. It was a legal hustle that got me high. You know what I mean? But it's for somebody that's really motivated, really got that
definitely
hustle.
Have to be a self-starter and everything. Because your income is dependent on you. The money is there. And whether you lag, and then 9 times out of 10, if you're lagging, you're not going to make it at that company. And just like when you had sheer mortgage, I had my contract in processing,
Right.
and I was processing for your company and a couple of other brokers. And some of the brokers, getting back to a little bit on fraud, but some of the brokers I didn't trust because it was like, you can look at a loan and be like, for real, come on. Like, I'm not going to. And then a lot of times, like, listen, okay, well, send me what you want to send me.
Mm-hmm.
You know, don't, make sure it's okay when it comes to me. Because if I come and see some pay stub, because they make up everything, they still doing that too.
Yeah.
If I see
Clue,
something that's
white
fraudulent,
out.
it's not going to come past me.
Right.
Because then once I submit it,
It's
I have
on
a
her.
relationship
Right.
And
with
it's
the
on her.
lender.
Yeah.
You know, they're like, oh, this processing company, don't use her. This, you know what I mean?
Right.
So, yeah, it's crazy.
Yeah, and just once that whole industry went down, a lot of people we know went to jail. A lot of people, yeah, we did. It was terrible, and I mean, there were loans. People went to jail for loans that came through my office. I didn't do them.
Oh, girl.
For whatever reason,
Supposed to be in jail.
it's called Grace of God because it was something about that loan
That looked
that I
fishy.
just didn't, I wasn't feeling. But
And then a lot of times when they come through, if you can tell because you pull their credit, their credit done
Been
pulled by
pulled.
3 or 4
Yeah,
different
why
lenders.
so many people?
Right.
So why they ain't closing
Right,
up? What
right,
happened?
exactly.
Oh, this nigga, yeah, okay. And I think our savviness, I would,
Right.
I would
hustle from
attribute it
Philly.
from Philly.
Yep.
Exactly.
Our hustle from Philly helped us.
Yeah.
Because some of them processors went to jail.
Yep.
You know?
Yep.
And they can look at it like, oh, I can make this quick money. No, honey, don't look at it like that because it's going to come back to bite you.
Right.
Yep. And then, and then the thing is with me having a mortgage company and I would being a broker, I had loan officers under me. So anything they did would have came back on me because they did it under my license. You know what I mean? So that was another thing. I had to watch what they were doing too, which is why I hired Dot's contracting company because it would come through her.
And I'd be like, Sherry, you see this loan? All right, well, look, just look at the pay stubs and call me back. Then she go chew one of our loan officers out. And I'll be like, well.
That's funny.
Yeah, but those were the days.
That sounds like a thriller.
It was
Yes,
really
very
good.
good.
We really had a good time.
And then I'm telling you, just is off the subject or whatever, but them, being a processor, even a broker shop, okay, they had people that represented the banks. They called account executives.
Right.
She was account
I was an
executive.
account
right?
executive for a long time.
For account executive, the account executive would know how to treat you. If you
Yes.
sending them your business, you was going on massages every
Yep.
month.
Golfing,
They was sending lunch, dinner. We stayed with food from Dave and Buster's when I was at that company
Right.
up in Marietta.
Yep.
I mean, they knew
Yep.
how to treat because they was making money.
Mm-hmm.
They were
Yep.
making money, so they knew it was a broker shop here. They was like, okay, I want all this business. Let me see that. And everybody would come. Hey, can y'all send us? I send you one. Whatever. It was great
Because you had so many options to really choose from, so they really had to win you over. You had to. So when I did that, after I was a processor, so I started off as an administrative assistant because Dot forced me into it, which is a whole nother story. But administrative assistant, then I went to a processor like that. But then I became a account exec.
Okay, and I think you told me about that, like just going.
I had a territory.
It's a sales position.
Yeah.
All you do is
Yep.
go and talk.
Yep.
That's all you
and
do.
drive and be like, look, y'all, you should send me your loans because we got this program, we got that program. You had to know your stuff though.
Yeah.
We had this program, we had that program, and then I'd be like, all right, I'm gonna bring y'all lunch, but y'all gotta give me 3 loans out this office. So Fidelity is who I ended up working for.
Right.
They were started off as one of my, brokers, my shops.
And I
when I was
processed for
account
them
exec.
too.
Right. And then, so it's just, and that's another thing, the industry is really big, but it's really small.
Yeah.
I would say it sounds like it's
You know
really a lot to it.
if somebody came to me and said I was processing loans or I was, working at this company in this period of time, I'm sure we know them.
Yeah.
Right.
And it was so, the job, I'd be working, I was processing it, I'd be working, I'd be like, they get on my nerves with these files. If I get one more crappy file, I was quitting for real. I get a file, all right, I go to the they still had typewriters. I go around the corner to the typewriter, type up my resignation, give my resignation, walk out, call, look, y'all hired, yes.
Yep, go right over
Start
there.
Monday.
Yep.
What?
Yep.
Did it plenty of times.
Yep.
Plenty of times.
Because there was so many companies.
Yeah.
And they wanted good people.
Right.
You know what I mean?
And then if you think about it too, like, maybe when y'all started, it was like really just starting with the housing mortgage industry, like before what you said, like the 80s.
Right.
Was there really anything set in stone with the mortgage? Like, wasn't it just kind of taken off in a way, like with mortgage?
I think
mortgage
with
has been around for a
everything,
long
yeah.
time.
But I think what happened with anything, just because a lot of times, like, listen, for instance, I worked for GMAC Mortgage. That's when I started servicing. They had another, on the other side, what they called originations, where they was originating the loans, making up the loans that we did. But they would not hire me because I hadn't had the experience. Now, back then, it wasn't a lot of black people that was doing mortgages.
Right.
That's what happened.
Okay.
To me, in my opinion, that's what happened.
No, that's
you know
true.
what I mean?
That's true.
Once it started, okay, then it was lucrative, because, you know, they all, I don't know. But, you know, it's easy to do, but they would try to keep us out.
Right.
But then when we started doing it, it was like, okay, and like I said, for you not to have a degree to make this kind of money,
And maybe that's what I'm thinking. Like, it wasn't.
That's probably it. Yeah.
I think
Because we could go to that weird show we watched on Amazon Prime.
Yeah, that was a weird show.
Yeah, so it was talking about.
Oh yeah, the bank, when he was working in the bank.
It was talking about redlining.
Right.
And
right.
you know, it was, the house was sold to him by a white woman,
Right.
and that was really the industry then. It was white people.
Exactly.
And that's when, so I don't really know the timeline of redlining.
But that's what it was back then.
So
it was back
that's
then.
what I'm saying. So maybe he just got out of it, or like that's when.
Yeah, that's when it was like, because a lot of times you couldn't, and or you had to buy. And that's what happened. Yeah, I can say that because you had to buy in a certain area, the redlining. And then when they stopped that, when you was able to buy and people was educating people, listen, you ain't got to rent no more. You ain't got to live in you know, these areas. You can come live up here. You know, and that's when they started doing it.
Right.
So it was like, okay.
Yeah.
It's an open market.
One of the banks, and I can't remember what bank it was, but one of the banks got, like, it ended up having to pay, or what? Maybe it wasn't the bank. Maybe it was a company that had to end up paying because of redlining.
And I think it was quite a few.
Oh,
NACA was
okay, so NACA
is a result of redlining.
He's like sued a bank. You're right, something like that.
Right.
I did some research on NACA. It's for first home. I always feel like I mess up the phrase.
First time home buyers.
First time. I'm missing the time. First time home buyers. It's a program for that, and it's also like financial assistance in a way too. But I can't remember the bank. He really did like come and just take over the industry, but really low interest rates. You don't have to have a good credit score, but it's a really, really tedious and strenuous process.
I can tell you that. When it first started, you had to have patience.
Girl, you need more
and not even the patience, you just got to understand, because the people they working there. But to piggyback off of first time home buyer, a lot of people think that these programs that they have for first time home buyers is for actually first time. No, you have had you couldn't own a home in the last 2 years.
Oh,
isn't that interesting?
I didn't know that. Has it always been like that?
Yeah, as long as I've known it.
I don't know why they even call it first time home buyer.
Okay, I never knew that.
Right.
Okay. Wow. That changes the game.
Right.
So, okay. And back to redlining. That's a really good topic that, you know, we're not going to get into on here, but if you don't know what it is, look it up. And also a good read is called The Color of Law. It talks very thoroughly about redlining. Very good book. So just educate yourself on that for everyone listening.
Right.
It's big and important.
Yep. And you know, that redlining still exists.
Yep. And you don't know where you're going if you don't know where you came from.
That's right.
And it affects everybody, not just
not just people of color.
Yep. Exactly.
Everybody. Yep. Well, good. That was a good show. Thank you.
Thank you for having me, ladies. I
very
really appreciate
informative.
it. Yes,
Very
and
much
get the word out to your friends, Erica. That you know, it's very easy to purchase a home. You know, if you're serious. Okay, you just can't come in there like, you know, you got to work on it. Everything. You got to take, and you know, anything anyway. Even if you're not, for whatever reason, ready to buy a home, you still need to have good credit.
Right.
You know, anything can happen.
Right.
And you want to be able to handle it as an adult.
Right.
You don't have to call on mom or dad. You know, build your credit. You know, because you may not like it, but in this world, credit is everything.
Credit is. Well, in this country, because it's other parts of the world that don't use credit. It's just the United States just terrible. We're just a big time credit company, but
money hungry.
Yep.
Well, thank you guys.
Thank
as
you
always,
so much.
It's been a pleasure. Thank you, Auntie
so
Dot.
much.
Can I say this?
Yes.
Generation conversation.
That's all she wanted to say. Well, thank you for that. That was beautiful. Thank you. We had a great time. Thank y'all for tuning in.
Thank you,
Have
guys.
a great week.
All right.
We love you.
Peace.
Peace.